Hello everyone, petar.jacimovic here from vicofanalysis.com. I want to post the update on the British Pound USD setup and position I took basically a few days ago, and I marked the points according to the Vyckoff analysis, so I can explain you this anatomy of the trading range and this example on position reasoning why I took this transaction. I hope you enjoyed the yesterday's webinar, and today I just doing the update on the British Pound USD. So basically, again, British Pound is in strong downward trend. This is the daily time frame. Look at the strong downward movement. Price dropped about 2,600 pips. Then price went to the correction here, did some ABCD form here, and went to exactly 50% retracement. There, some syndicated groups started to sell this currency pair, and we started to go lower. We created very good downward leg, then another upward leg, but we created lower swing high, and then we created head and shoulders formation, which is very good. It's the best formation if we see speak about the topping formations. We broke that head and shoulders formation, retested that neckline, and we went lower, created another lower swing high, and then correction here, another lower swing high. If I zoom you in here right now, the reasoning why I took selling position is because this is a 6 days trading range. Actually, it's formed by 1, 2, 3, 4. This is 5 days trading range, and then breakout and back up into trading range. So it's about 6 days in the total range, which is very good short-term opportunity for professional traders. While the scalpers and intraday traders fighting, and and the market doing the fixes, or stop loss counting, you can call that. The professionals are waiting the good opportunity. They have this trading range in their in their eyes, but they don't. They wait clearly to see the opportunity, and then they try to, and they benefit from the trading range. And when the price is out of trading range, it's actually basically they're earning. So they let the weak holders, they let the public, the crowd to basically fight day by day versus there is a lot of stop loss countings here. Price break the swing high, then back. Price break the swing low, then back. Price break swing high, then back. So a lot of stop loss hunting, and I explained on my webinar how they doing that. Anyway, so the trend is very strong downward on the daily time frame, so we know that big boys are bearish. So right now, after a trading range form, we can watch potential selling opportunities. I will back to 30 minutes time frame and explain you according to the Vyckoff analysis. We got the trading range, everything started here, stopped with the buying climax, this buying climatic action, and then we went to the automatic rally, and we created some first form of the trading range. Then TUT, this is the terminal uptrust, and it's the stop loss hunting by banks and funds to take the stop losses of the sellers, fill the pending buy orders, and also later on close them as well in the stop loss. Later on, we back to the ICE, which is basically support, and we created this sign of the weakness. The first sign of the weakness appeared here, and this is the breakout of the previous trading range. But because of the daily time frame, it didn't finish that stage. This shouldn't be entry at all. This is the first sign of the weakness. You can have the few signs of the weakness before the major sign of weakness and the major breakout where you should establish position. Anyway, this is another stop loss counting, and this is also some shakeout here. Market again, stop loss orders, sell orders pending fill, and also later on they also got stop loss here. We got a few secondary tests here, ST here, and then another uptrust back here into this resistance, and then another uptrust back here, and finally uptrust after distribution. It's when from this uptrust price distributed very strongly to the trading range here, and then this is the sign of the weakness, after all shakeouts and after all stop loss hunting by banks and hedge funds, we created last point of supply, an area where I built position basically around 1.5, 145 is the very, very good positioning. This is the most professional how to play with trading range. Some aggressive sellers sold around this stage here, but even if you do aggressively after this head and shoulders formation on 30 minutes and after the backing the trading range, also you know in the background the daily daily and weekly time frame favoring the sellers. So this with big trend in the background, if you wanted to sell here, I will not sell with full position. So if I risk basically 0.5 for my account in a position, I will put like 0.2 on this, try to this aggressive, put a stop loss above this right shoulder here, and then when the price go here and retest, I build my major position 0.5, for example. I just add position major one, or you don't trade this one and just basically trigger the 0.5. I didn't trade this one, I just waited this 0.5. I don't like aggressive setups, but from time to time I also try with very, very small risk to do aggressive and then build the major one. What's going on? It's last point of supply, and then price to go lower, and then this is the back up into the ice, and basically it's retesting of the support, which now became resistance once it's broken. And this is the anatomy of the trading range, how to spot this. And again, I mean, right now I secured position pretty much after 10 days, after 10 hours price went lower, and basically I'm right now in plus about 100 pips. My aiming is 1-3 ratio. Since I risked 100 pips at the first stage, I'm aiming for minimum 1-3 ratio. So basically my target is, again, my final target is 1.4, 855. And then if I want to hold longer, I can go even for 1.5 and take 1.4, 650, which is the, if I go to the daily, you will see that that is the area of the swing low here, and this is the small demand also here, 100 expansion. And I hope you enjoyed this analysis, guys. And if you want to learn my method and how to use the Wyckoff analysis pure price section, how to combine multi-Fibonacci zones, and also watch to implement the volume spread analysis into this, and trend channels and so on, and then the base and the formations like head and shoulders together, all this together make the professional way of how to analyze the market. I hope you enjoyed, and if you want to learn my method, you can visit my website wyckoffanalysis.com. There you can see more about my mentorship program. Also you can add me on the Skype so we can talk about possible cooperation. Wish you a good weekend, and hope you took also, and that you have also positioned with me, and hope for a good profit the next week. I expect really my target. Bye for now, and wish you a good day.